Good evening, ladies and gentlemen. My name is Muthu Kumar. I'm a part of Disciples India Learning Forum. I'll be the host today. So I have all the people here. So we proceed further. All right. So let me run you through a presentation that will help us understand what is Disciple India. Okay. So before we start, may I request all of you to kindly mute your phones so that it is not disturbed. Possibly, if you can sit in a place where you're not disturbed, is great. And request you to ask questions at the end of the session so that the session goes undisturbed. So, what is the agenda we have for the day? That is for today. Is first we will have welcome and introduction. Then we will have journey so far for Disciples India Group and Disciples India Learning Forum, and we have guest speakers introduction, and the session goes. That's the flow of the day. And next is our vision. What is our vision? Is to excel as a focused and fulfilling learning destination for a new age growth aspirants. And what's our mission? We will be a practice based professional training and consulting platform through novel and a relevant process of transformation to individuals and organizations. Our core values are honesty, hard work, healthy, honor, and happiness. So, what is Disciples India Learning Forum? It's basically a place where people feel really happy. We wanted people to have a joy of learning. That's the platform all about. And what is its objective? It is to provide a platform to share and exchange ideas and experiences, to create, develop personal and professional network of learners, and to enhance effective communication and leadership skills, to foster learning and contribute for personal, professional, and organizational development, to update with life management skills, and contribute as an effective member of the society. So that's been the objectives of the Disciples India for Learning. So that's a quick video of what has happened during last 3-4 years in Disciples Learning Forum. So this is the Disciples India Learning Forum organizing committee members. We have Dr. A.M. Suresh, who's the advisor, Dr. Sandhya, the president, and myself in the role of vice president, and Mr. Parthos, who's the secretary, and Dr. Satish, joint secretary, and Mr. Shiv Prasad, the treasurer, and Mr. Akhilesh, the executive member. And in terms of learning forum sessions, in 2018, 19, and 2021, we have done about 83 sessions so far. And the last 3 previous sessions were, the first session for this year was 81st. Dr. Rani Arnav spoke about exploring psychological contract in the current scenario. Then on the 82nd session, we had Healthy States, Progressive India, Ranking of States and Union Territories by Dr. Ratan Chand. And 83rd session was on click wrap contracts and privacy issues in India by the guest speaker, that is Rama Iyer. And for today, we have the session on investment avenues and tax planning by Disciples India Foreign Learning and Foreign Association, in association with Institute of Practical and Accounting Taxations, that is Impact, Bangalore. So over to Dr. Sandhya for introducing our guest speaker today.
Good evening, everyone. I'm given the pleasant task of introducing today's guest speaker, Professor Satyanarayana. Professor Satyanarayana holds a master's degree in business administration with specialization in finance from PTU. He has 12 years of relevant industry experience in financial services and 9 years in academics teaching MBA and PGDM students. He has worked with Geojit and India Bulls in various managerial positions and JM Financial as Vice President. He is specialized in the areas of investment management, risk management, and financial planning. Professor Satyanarayana has conducted several workshops on capital market topics like portfolio theories, option strategies, technical analysis, and stocks. While being a freelance stock market trainer, he has conducted a webinar on financial derivatives. Latest developments in the Indian derivatives market and practical aspects of financial derivatives. So we are very happy to have with us Professor Satyanarayana. So welcome to you, sir.
Thank you, madam.
I extend a warm welcome.
Thank you.
Today our guest is going to speak about tax planning and investment avenues open. So over to you, sir. Thank you.
Thank you, madam. It's nice to be part of your institute. Can I get a screen sharing option?
Sure, sir. I'll just stop sharing screen.
Hope my screen is visible.
Yeah, it is.
Yeah, thank you. It's nice to be part of your organization. Actually, I could see that, okay, a lot of programs you're conducting as a part of social service. So that's nice to see. Okay, I want this session to be interactive. Okay, what is that? You have any protocol like, okay, the question should be asked in the end, something like that?
Nothing as such. You can, anybody can ask anytime if in case the floor is open for that.
Okay, if it doesn't disturb to all, I don't think like it will be a problem. Yeah, I don't mind if someone asks questions in between. That is how it should be actually. Anyway, no problem. So agenda for today's session will be like this. So first we'll try to understand why we have to invest. So see, when it comes to investment, many of us have still a myth that, okay, investment is risky. The moment you talk about investment, people think that, okay, it's only stock market. So let's try to understand what happens if we don't invest or why we have to invest. Let's try to understand that. Then we'll slowly move on to investment avenues, like from individual point of view. I'm not going to cover from corporate point of view, from an individual point of view. What are the different avenues are available where we can invest, like what are the pros and cons of each investment? Let's try to understand. It's a vast topic. Let me try how much I can cover within 1 hour. Then comes to your tax planning. Again, it's only for the salaried people. I'm not going to discuss from business point of view, from salaried people point of view, like how we can plan our tax, because many of us know that what happens in the month of January, February, March, especially February and March, like 50% or 60% of salary will be going towards taxation. So if you do proper planning, we can avoid that one. Let's try to understand that one. Then in the end, if someone wants to ask a question, so the floor will be open to that. So why should we invest? If anyone has an answer, you can tell me. Otherwise, I'll tell my answers or I'll discuss. Okay, so generally, what happens, like everyone who has money will be thinking, okay, what to do with the money, right? So earlier, we used to have something like, okay, we used to keep money in the treasury or at home. Even now, so like if you talk about the senior citizens, they don't want to take risk. So even that is better, like we suggest. But okay, at the same time, what happens when they don't invest? Also, we should know. One is to ensure present and future financial security. See, just by saving money, you're not going to earn money. Saving money actually, yes, it's good for the financial planning. I agree that, okay, you need to save money. What are the money you're going to earn? If you ask me, like 20%, minimum 20% of your earnings should be saved. Just by saving, it will not have any impact on your financial planning or financial growth. So you need to invest that money. So ensure that why we have to invest it, it ensures that present and future financial security will be taken care. Like if you have any short-term financial goals or long-term financial goals, so that will be taken care. Second one, your wealth should be grown. So there should be some growth in your wealth. Okay, whatever the wealth you might be having, irrespective of your portfolio of your investments, the wealth should grow. If your wealth is not growing, your inflation will eat your corpus, whatever the money you have. Then generate inflation beating returns. So the most important point, what we should focus in today's world is inflation, because see, in India, especially now, what is happening is like interest rates have drastically fallen. So slowly, like you can see that, okay, recently SB has said that, okay, they are going to increase interest rate by 0.1%. So that's an indication after a long period of time that interest rates might be going up in short term. Right. So what happens now, even that will not be sufficient. Even 0.1%, what SBI has told, they're going to increase interest rate, it will not be sufficient, because so if you keep an FD for more than 5 years or 3 years or whatever it is, like you're going to get a return of 6.5, 6.6%, whereas our inflation is more than that. So what happens practically, your money will not grow. Your inflation will eat out the returns, whatever you're going to get. Apart from that, there are a lot of other constraints, like, okay, suppose you're a person who is with a 30%, who is under 30% tax bracket. So what are the interest you earn on your FD? So out of that, 30% will go for taxation, even 10% or 20%, even 10%, if you talk about 7% out of this, 10% is 0.7%. Or if you are 20% tax bracket, 1.4% will go, 30%, 2.1% will go. So practically, even if you're getting to 7% return, your absolute return or actual return will be around 4.9%, whereas our inflation is much more than that one. That means your money, your returns, what you're going to get, actual returns or real return, what we call it as, is not beating the inflation. So that is one of the reasons why we have to invest. Then next one is reach financial goals. So what are the goals you have? Like youngsters will be having a lot of their dreams. Okay, it might be buying a house, or it might be buying a property, or it might be buying a car. So they'll be having a lot of financial goals, and also not necessarily youngsters, even the people at 50, 60, like they'll be having a lot of goals. Like, okay, for example, if they want to get marry their kids, okay, they need money. So we know that nowadays how much we're going to spend, especially in COVID cases, it's okay. The expenses have come down, but otherwise we know how much we're going to spend for a marriage, at least minimum 8 lakh, 10 lakh, and on average, even a small family will be spending at least 3 to 4 lakh rupees. That's a minimum, I can say that. Otherwise, it will be around 10 lakh rupees. So how we are going to meet those financial goals? So it is difficult. If you don't invest money, it is difficult to reach those financial goals. Then obviously, like, we can minimize tax liability by investing money. So if you just keep money with you, whatever the money you're going to earn, you're going to pay higher taxes. Instead of that, okay, there are a lot of opportunities where you can invest. If you do that one, so there are chances that your tax liability might come down. So these are different reasons why you should invest. So let's try to focus on like where we can invest. So there are a lot of investment avenues available. I told you, like, I'll start with your fixed deposits. Yes, fixed deposit is the one where you can invest. Okay, here also what happens when it comes to fixed deposit, one should be very careful, because we will be having a lot of opportunities when it comes to fixed deposit. See, we say that fixed deposit is an investment, but when it comes to fixed deposit, there are different rates of returns you might earn in this also. See, fixed deposit might vary from 3 months, 6 months, 1 year, 3 year, 5 years. Now we have an option, like if you are able to keep a fixed deposit in a nationalized bank or post office, even that can be considered for tax saving. So that is one advantage. Second thing is like, okay, there are some cases where you might earn returns more than 9%, 10%, whatever it is. But you should be careful the moment you think about return. you should know that the risk also will be more in those cases. So in investment, what happens, your risk and return will go hand in hand. It means if you are expecting higher return, you should be ready to take higher risk. Or if you are not ready to take higher risk, then you should be satisfied with the lower returns. So that is how it works. So fixed deposit, normally what happens, you're going to get some returns. The returns generally in nationalized banks, it will be somewhere around 6.5% or 6.25%, depending on a bank. Like Cooperative Bank, if you go, you might get 7%, 8%, 9%. There are some cooperative societies or banks where you're going to get even 12% return. But at the same time, what happens to the risk? Yes, risk level also will go up. This is one option as an investor, you might look into it. So if it is less than 5 years, yes, you are not going to get any tax benefit. If it is more than 5 years, you're going to get some tax benefit on your investment. But whatever the interest you earn, that is fully taxable. That you should keep it in mind. So any interest you're going to get it on fixed deposit, it is fully taxable. So depending on your tax slab, you should decide whether you should go for fixed deposit or not. So next comes your real estate. So obviously, like real estate is one of the portfolio of any investor or anybody who is earning money would like to have some real estate investment. It can be land, or it can be building, or flat, apartment, whatever it is. So what happens here again with the real estate investment? Suppose it depends on your time frame. See, if you are planning for creating a wealth by investing in real estate, it's good. If you're planning for short-term investment, I don't suggest this real estate investment. We know that, okay, land value will not go down. At the same time, when it comes to liquidity, you should be careful about real estate. So what happens, we all know that what happens, suppose you want to liquidate, you have a site somewhere in Bangalore and you want to liquidate it. You need some money in 2 to 3 months or 4 months time. The moment buyer comes to know that, the moment market comes to know that, okay, he is in a hurry to sell, you will not be getting the market returns. What are the market rate will be there? You're not going to get that market rate. So you might be getting around 10 to 20% less. So if you're planning for short term, or if you have some investment plan where you need this money within a short span of time, I don't suggest to invest in real estate. Same thing with the fixed deposit also. Fixed deposit also, yes, you can liquidate, no doubt about it. But when it comes to your actual returns, when you break your FD within the specified time frame, whatever you kept it, there are some charges they're going to charge. So you might lose some interest, but the risk will be hardly 1.1 to 1.5% of your returns that can be taken. But in case of real estate, what happens, like it is difficult to liquidate your assets. So you should be careful when it comes to real estate. And you also should take care when it comes to real estate, a lot of other things like, okay, whether the property is private property or public property, or sorry, in case VDA, or is it converted or whatever it is, that you should be careful about this. We know that a lot of cases where people would have lost money as well as the property. So we would have heard a lot of examples. So be careful when it comes to real estate. Next is gold. We know that in India, gold is one part of your investments. Okay. Gold also is good for investment, but what rate to buy? Because gold is very dynamic in terms of your pricing. Recently, because of your old economic position, like gold prices have gone up, it might be somewhere around 52,000 now. Yes, on the long run, gold is a good investment. It is going to give a good return. Again, I suggest if you're looking for short-term investment, no, it's not a good option for investment in gold. Because the moment you want to liquidate, there are chances that, okay, we don't know like what will be the price. It's very dynamic. Okay, on a long run, yes, it's good for investment. Long run in the sense, like if you're planning to invest for 4 years, 5 years, 10 years, like if take the last 10 years average return, it's good in gold also, right? So you should be careful when it comes to gold. And whenever you want to invest in gold, I suggest to invest in bars, or you can buy biscuits or whatever you call it as. Don't invest in jewelry if it is for investment. Yes, obviously, like if you're going to use it, you use gold at home, it's good. But if you're planning for investment, I don't suggest to buy jewelry, because we know that, okay, when you want to liquidate a jewelry, the prices at which they're going to buy back, That means the prices at which you are going to sell it to the jewelry shop owners, it will be different than whatever the price you buy. So minimum difference will be around 6%. Say 6% is a big difference for us, for an investor who is looking for a return of 10%, 15%. If you're going to lose 6% there, so that will be that will eat out your inflation. I mean, that will eat out your returns. So I suggest, like, if you're planning to invest in gold, buy gold bars or gold biscuits or whatever you call it as. Don't buy jewelry if you're planning for investment. Now there's an option to buy your gold in terms of your electronic gold. Also, you can buy gold. You can keep it in your demat account, because if you buy a bar, the problem is like where to keep this physical gold. Again, it's a security issue. So instead of that, you can buy e-gold. It will be in your demat account. So it is easy to secure. It is secured also, and it will be in your demat account. Whenever you want to sell, you need not go anywhere. Online, you can sell it off. So that's an advantage with the gold. Next is PPF. This almost everyone will be having this PPF account. Advantage with this account is, like, whatever the investment you're going to do, that in the entire investment you can claim under section 80C for tax rebate, or you can claim under 80C deduction. One constraint with PPF account is minimum 15 years you have to invest, or you have to hold. Before that, you cannot withdraw. Partial withdrawal is allowed after 8 years, but not fully. But I suggest anyone who is planning for retirement, I suggest to have one PPF account, because one advantage with this is, like, interest rates will be better than any other your bank rates and all. Second thing is, like, it is taken care from Government of India. Government will take care of interest rate. Third, the moment you know that, okay, I cannot withdraw this money, you will forget that, okay, anyway, that I cannot use it. See, in all other cases, what happens when you have an option to withdraw, you will be tempted to withdraw the money. So in that way, PPF account is safer. At least 15 years you're going to invest whatever the amount. Minimum investment you're supposed to do is 500 rupees in a year, anytime in the year. At least minimum 500 rupees you have to do it. Otherwise, your account will be dormant. Again, if you want to reactivate, it is possible to activate that account. Yeah, there are some charges banks are going to charge. But I suggest everyone to have one PPF account. If in a family, like both husband and wife, they're working, both can have PPF account. I suggest maximum you can invest till 1.5 lakh in PPF account. Next is the latest one. What we have is NPS, National Pension Scheme. Why this national pension scheme is, like, okay, now we don't have something called pension, especially the private sector. The private sector. Can I request participants to mute yourself if you're not going to discuss, if you're not going to talk? It might disturb everyone. Okay, so NPS is one thing, like, especially in the private sector, we don't have any pension schemes now. Like, if you want to take care of your retirement, what we can do is we can contribute some amount towards pension, so that it will be taken care from the portfolio manager, okay, whatever the portfolio you're going to invest. So here, what happens? You have you're going to get a tax benefit here also. When you are going to invest in NPS, you're going to get tax benefit. That is in addition to your normal exemption or deduction under ATC, you're going to get additional deduction up to 50,000 rupees. So then here, you have an option to decide whether you want to go for dynamic, whether you want to be very aggressive, whether you want to go for aggressive investment or whether you want to go for defensive investment. While investing, you can decide. Based on that, your portfolio manager, whatever the fund you're going to choose, they are going to decide, okay, they are going to invest. What are the money you're going to invest? What are the money you're going to put it in NPS? They're going to invest based on your plan, whether you want to be aggressive, defensive. Based on that, they're going to decide. So you can choose whatever the way you want to invest. So preferably, what I suggest is the youngsters can go for aggressive plan, whereas the person who is above 50 years, I'm not going to suggest for aggressive plan, because the more aggressive, what happens, the risk will be more. So this is one of the options what we have. So when it comes to other than this normal investments, what we have seen till now, like bonds are one of the options what we have as an individual investors. Because normally what happens, 90% of the investors will not invest in bonds in India especially. So these are one of the options. So not necessarily bond you have to buy in the IPO only. You can buy these bonds in the secondary market. Almost all the bonds which are issued in last 6 to 7 years, or I can say that last 10 years, all the bonds are available in the secondary market. Even a normal regular retailer or individual also can buy these bonds. So, so many people are not aware what is that we have to look out. What happens, like bonds will carry fixed interest rate. Your returns will be fixed in case of bonds. So one thing is you should check out like what is the coupon rate for this? How does the interest rate the bond will carry? If a bond is issued 5 years back, interest rate might be around 8%, 9%. If they're going to issue now, the bond interest rate may be around 7%, 7.25 to 5%, whatever it is. Now, so how this will, how you're going to decide whether to buy this bond or not? See, when the bond was issued, so let's say that okay, bond is carrying interest rate of 8.25%. Now current market interest rate is 7%. Normally, what happens? These bonds which are carrying 8% will be traded at higher than the face value. A bond normally will have a face value of 1,000 rupees. It might be trading at 1,030 rupees or 40 rupees because you're going to get additional return of 1%. Because the market return or market interest rate as of now, it is around 7%, whereas your bond is carrying interest rate of 8.25%. That 1.25% additional return, what you're going to get, that will get adjusted with your price. So ultimately, your yield might work out at the current market rate, but still it's good actually. Because you're going to, whatever the return you're going to get, you're going to get it for next whatever the number of years that it is having a maturity period. So suppose if the bond is 5 years old, you're going to get another 5 years interest from this particular bond, what are the bond you're going to invest. But all the bonds are available, so you decide which one you're going to invest. Second thing, what you should look out in the take care of in the investment in case of bond is like what is the credit rating of these bonds. So that is one of the most important thing as an investor we should look out for. One of the criteria for investment in case of your debt instruments, it can be bonds or debentures. So bonds we have generally in India, which is issued for national services, like okay, when they were going to build any infra projects, they're going to issue bonds. Otherwise, all the corporates are going to issue debentures. So it is known as NCDs, non-convertible debentures. That means your debentures will have some maturity period. After the maturity period, you're going to get back your investments. That is what is NCD. So NCDs will carry, it's mandatory in India now. It's that, okay, all the NCDs before the issue, they should go for credit rating. After the issue also, normally credit rating agencies will go for updates in terms of rating. So look out for that particular rating. So as long as the ratings are top, that is AAA or AAA plus plus or AA, whatever it is, so that is safe for investment. So what happens when you have these higher rating bonds, higher credit rating bonds, generally interest rates will be little bit lower compared to your lower rating bonds. So it will get compensated there. So if you are ready to take risk, then you can go for lower rated bonds. So it depends on the investor, because investor will have different expectations in terms of returns, and also the psychology of each investors will differ. So if you are a person who is ready to take little bit risk, you can go for bond with a lower rate so that you can earn little bit higher rate of return, lower ranking so that you're going to get higher rate of return. Or if you say that, okay, I don't want to take risk, but I want my money to be safe, you can go for higher rated bonds, AAA rated bonds or something like that, so that your chances of losing money are minimal. I can say that, okay, 0.001% with a AAA rated bonds or debentures. So this is one thing you should take care. Normally, like in India, I was not seeing any very few individuals who will be investing in bonds, especially retailers. Participation is, I can say that 1% will be the participation in case of bonds. So that can be taken as an option for investment in bonds or any debentures. Then comes the one of the most important thing, what is happening in India in last, I can say that 2 to 3 years, what happened in India is equity participation. So even now, many people feel like, okay, equity investment is risky. Yes, I 100% agree with that. There's a risk involved in equity investment, because we have seen people who have lost money, especially I have seen people who lost money, big money, and at the same time, I have seen people who have made money also. Let's take it positively and take it as one portfolio, one of the investment avenue. So what happens when it comes to equity? A few things you should take care. If you're able to take care of some disciplined investment pattern in equity, yes, you can make money. I'm not going to guarantee, nobody can guarantee any returns in case of equity. So if somebody is telling that, okay, I'll guarantee a return of 10%, don't believe, don't trust. There is no guaranteed return in case of equity that is there, right? But what are these disciplined trading? Disciplined trading is one is when you invest in equity, so expect some decent return. Don't be greedy in terms of returns. What do you mean by greedy? Okay, there are chances that you might get 100% return, but don't expect that 100% return. Why 100%? Okay, even if you get 20%, 30% return, that should be fair enough. See, you would have seen like last 2 years what happens, especially in India. Markets have grown. I mean, it has gone up like anything. Yes, it has come down in last 1 week. Again, yesterday it went up. But at the same time, there are some stocks where the companies, investors would have lost money. So it's a very dynamic because it is exposed to the economy. If something goes wrong across the world, not necessarily in India, it is going to have some impact on the equity market. For example, when Russia attacked on Ukraine, so Indian market has stumbled. Day before yesterday, it has come down by around 4.5%. That is on Thursday. The reason is simple, like because we all know that okay, crude prices are expected to go up because of this. When yesterday Russia said like okay, we are not going to have any issue in terms of supply of crude to India, the moment that news has come, again yesterday's markets have gone up. So like this, it's very dynamic. Any small issue related to economy, it will have an impact on the equity market. So one discipline what you're supposed to do is like don't be greedy in terms of return. Second thing, if you're ready to invest for long term, then only you get into equity market. Minimum 3 years, anything above 3 years. If you're ready to wait, then you can invest because it's a cycle. If suppose markets are going down, you should have some patience to wait for some longer period so that you're going to get return. Okay. So and third is like, okay, don't depend on someone else for your investment. I would like to quote one example here when it comes to investment. Normally, what happens when you want to do a shopping, let's take an example when you want to go do a shopping of your clothes. So what we do like now, it's all about online. So even in online, we'll be spending a lot of time, okay, which brand is good, how much is the offer, is it good, what is the rating, all those things. Even when you go to shop, what you do is you want to search, you go visit at least 2 to 3 shops. You will spend at least 3 hours, 4 hours of time for spending a 5,000 rupees for a pair of clothes. So if that is a scenario, you're going to spend money, and if for spending money, you're going to spend so much of time. So when it comes to investment, why don't you spend your same time for your investment? Because when it comes to investments, it will take care of your career, or it will take care of your future financial needs or goals. So if that is the case, why we have to depend on someone? So if someone buys a clothes for you, and will you, let's say that you're going to pay money, will you accept what the other person will buy the cloth? No, I don't think that many of us will not do that. So many of us, we would like to do shopping on our own because we can buy as per our convenient, whatever we want, we will buy. Similarly, let's do the same thing when it comes to investment. So yes, you take advice from others. So it's an era where you can get all the details on your fingertips. Suppose if someone says, okay, buy some XYZ company today, go and search, okay, what's the special thing in that? Or you ask that person, okay, why you are suggesting to buy? We have a lot of financial advisors. Yes, there are a lot of good companies, they do advisory services. Nothing wrong in that one, taking advice. Ultimately, you decide whether to invest in this particular company or not. So just Google, you ask that person, okay, tell me the reason behind investment in this company. And you Google, you find out, is it true or not? Because all the informations are available in the internet now. Google, find out, okay, see, ultimately you might take 1 or 2 hours extra, or you might take 1 day extra. See, when you're looking for long-term return, it doesn't make any big difference. So a good company will not go by 10-20% in 1 day. So it might go by 0.5 or 1%, let it go, but it will take care of your future. So you can save a lot of money. You can see your risk will go down when you are convinced that you're going to invest and you're going to get good return. The company is good. It will make you will be more satisfied person. So that is what I suggest in these cases. Like one is like, don't be greedy, and don't put entire money in one particular company. Irrespective of your investment, we'll be having some retail investors who want to invest 10,000 rupees. There'll be some investors who want to invest 1 lakh or 10 lakh, even 1 crore. Irrespective of your amount, make sure that you're going to diversify your investment when it comes to your equity. the way we are supposed to diversify your investments in all the different types of assets, I suggest you to have minimum at least 3 to 4 investment avenues in your baskets, irrespective of your amount. Let's say that even a person who want to invest 5 lakh rupees, they can have some fixed deposit, they can have some money in gold, they can have some money in NPS, PPF, as well as your equity and debt instruments. See, the reason is simple. See, if things are going well, equity will give you a good return. And from your retirement point of view, your NPS and PPF will take care, because that will become long-term investment. Suppose in case you are looking for a short-term investment, you can go for fixed deposit, you can encash it whenever you want. So all these things should be part of your basket. In that equity also, I suggest you to go for diversification. Don't get into one particular company or one particular sector. You invest in different sectors, so that input you can get it, like which are the sector which are expected to do well. See, you need not depend on someone else. So simple logic to understand, like simple way to understand, like, see, when you move around, keep an eye, just keep observe. Suppose you are planning to invest in automobile industry. Okay, not necessary that we have to invest now only. Have some observations. Okay, which are the way new vehicles are coming. A lot of ads will be coming on newspaper, media. A lot of promotions will be happening. Try to understand. Okay, what type of new vehicles are coming into market? Who are the persons who are manufacturing? Who are the person? Which are the companies who are selling it? And how many vehicles they have sold in last 1 to 3 or 1 to 3 months or 4 months or 5 months. See, all these things will give you some inputs. Okay, this company is doing well because a lot of vehicles I can see on the road. The moment you feel all these things, go back and try to do some research in terms of the company's financials. You will get to know, like, okay, some inputs about that. Okay, if you're convinced, you can buy. So initially, what I suggest, if you're a beginner in investment, you go for some small investment. Maybe you can buy a small quantity of the stocks, maybe around 2% or 3%, or whatever you wanted to buy, or 5%. Suppose, let's say that you want to invest 10 lakh rupees, invest only 5% in that now. You will get some idea, because that is then the moment you invest your money, you'll be serious. You'll start following up. So once you feel like, okay, the analysis what I've done is correct, yes, that will give you more confidence. That will boost your confidence. So next time when you want to do that, you'll get more confident. You'll be more confident. Then you can think about a little bit higher investment. So that will give you some idea. So at the same time, when you do this, your advisor also might come out by telling that, okay, so this is the company you would like. You can invest, or you can read in newspapers. Okay, this company looks good. So that will get added to your confidence. So like this, not necessary that we should always be depending on someone for your investment. There are a lot of cases where you can do on your own analysis. It's not a big deal. Yes, I agree that it's not so easy to do. There we have a lot of things like technical analysis and all those things. Yes, obviously, like, it is not possible for a retailer to understand unless you are interested. Yes, if you are interested, a lot of tools are available. Simple tools you can use even for the analysis, technical analysis also. It is possible, and you need not pay money for the classes and all. Everything is available in YouTube. If you are interested, Google how to do a technical analysis. You'll get a lot of other things. You can use just by using your SMA, or that is simple moving average, as exponential moving average. You should be RSI or MACD. You should be in a position to understand whether I can buy this particular stock or not. Based on your interest, you can go for this. So I suggest everyone to do this if you are an investor, because that's part of your financial goal. So unless you are interested, it is difficult for you to make money. If it is difficult for you to get good returns from the market. The one more investment, suppose I don't have time to do all those things, go for mutual funds. Mutual funds, again, you have different types of mutual funds. Like you can go for 100% equity, you can go for 100% debt. Debt includes all these debt instruments like your bonds, debentures, and all those things. Again, you have short-term investments in mutual funds also, like where the mutual fund companies are going to invest in short-term securities like commercial papers, commercial certificate of deposits, or bonds, debentures, whatever it is. So since these fund managers will have a lot of idea about these particular investments, so if you don't have time to think about all these things, I suggest you can go for mutual funds. Okay, because that will take care of your analysis part. Like you see a small investor who want to invest 1,000 rupees. Yes, there's a platform you can invest. Specifically, in case of mutual funds, I suggest normally to go for SIP, systematic investment planning. If someone asks, or if someone has noticed in India what is happening for last 12 months, even when your foreign investors are withdrawing the money, Indian markets are going up. One reason is the systematic investment planning, or SIPs. What is number of SIPs which has increased in India, unimaginable. The SIP amount itself is more than what FIs are going to invest in India in a month. That is one of the reasons why Indian markets are stable and continuously it's going up. A lot of retail participation is happening in India, and that is expected to continue in the future also. Because even if you just imagine, we are 130 crores, and out of that, hardly we have around 4%, as of now, around 3.8 or 3.9% of the participation in the market. If that jumps to 5%, that will take care of a lot of things in Indian economy. It will create liquidity. Then your expect in terms of your contribution from retailers to capital participation is good. Companies, we have seen a lot of IPOs are coming now. A lot of IPOs are lined up. So all these things are possible only when your retailers are going to participate. Yes, there is a myth that okay, only institutions are going to make money. Not necessarily only institutions are going to make money. If you are a smart investor, yes, you also can make money. Only thing is, don't invest for short term, invest for long term. So then the one who might be trading in the market might ask me, sir, what about this intraday trading? Yes, if you're ready to take risk, you can do that. Short term trading or intraday trading, or you can also get into the derivatives. It's all the risky instruments. That is the reason, like you would have seen, like SEBI has come out with a lot of restrictions in terms of intraday trading or in terms of short term trading. Earlier, if you're if you sell a share of worth rupees 1 lakh today, you are allowed to buy same amount of shares on the same day. But now there is a restriction. You are not supposed to buy until the payout happens. That is, as of now, from this month we have started with T+1 with some securities. Otherwise, it is T+2. So even most of the securities are in T+2 now. So that means you can buy the shares only after T+2 if you're going to use that particular funds. Otherwise, they're going to charge some penalty. So why this is happening? Because they want to protect the retail investors, right? So these are the things you should take care when it comes to your investment in the market, right? If anyone has any question, you can ask me, or I'll move on to your tax planning. Any questions in investment avenues? No? Okay.
If floor is open for folks to have any questions, to ask any questions.
Okay, no problem. So we'll move on to tax planning. So when it comes to tax planning, especially for salaried, generally what happens, we say that, okay, I don't understand what is happening. Specifically, those who are working in a company, so what happens? The moment you come is when it comes to declaration, till your HR department or your accounts finance department is going to ask you, okay, send me your tax declaration or investment declaration. You're not going to think about this particular tax planning. So one is what is tax planning is the question. So it is the analysis of financial situation are planned to ensure that all elements work together to allow you pay the lower tax possible. See, tax planning is always better. See, we are going to plan many things in our life. Why can't we do this small thing? So instead of getting 50% salary in last 3 months, let's plan it in advance so that it will get diversified, or it will get divided across 8 or 9 months. Practically, it is not possible to do planning for 12 months. So it can be done for 9 months, because the moment your March gets over, April, May, June is a breathing period for anyone, any salaried employee, because that is the month they are going to get full salary. So those 3 months, they'll try to spend whatever the, adjust whatever the shortfalls were there. So, right. So next one is why way to tax plan, because that will help you to minimize the amount of income tax what you are supposed to pay. I'm not asking you to avoid income tax or not to pay income tax. You are supposed to pay income tax, but how we can minimize income tax by doing proper planning. So what happens, the moment you're going to save that particular amount of tax, that will become your saving. You can invest that money somewhere else, so that that will take care of your returns. So these are the two things what you should take care. Now, when to plan? As I told you, like, okay, don't plan at the end of the year or in the last quarter, maybe in the month of November, December. That is the time generally your finance department will ask you, send me your investment declaration. Then you'll start about thinking, okay, I'm not in investment. Then you'll start thinking about, okay, where to invest, okay, from where get arrangements and all those things. No, don't get into that one. Okay, let them ask in the month of November, December. See, you will be aware from your previous Form 16 or from your previous income statement or tax planning, tax statement, what will be your approximate payment, what you are supposed to pay, what is the investment you are supposed to do. So what you do is, I suggest you to have a recurring deposit account. You can start in the month of April. So what happens when you do an RD in the month of April, you can invest some money. You can do it for 9 months or 12 months, depending on your convenient. So the moment you start your RD, nowadays it's very simple. You need not go to any bank. You need not physically go to any bank. Online, you can just open an RD account. No need to sign any form. It will happen instant. So when you have an RD, what happens? The money what you're supposed to pay tax, or the money what you're supposed to invest at the end of the year. Now you can start from April. From the beginning of early beginning of the year, you can start investing. It will give you some return along with your savings. You're going to get some return. So when you're supposed to invest, you can take out that money and you can invest there. Or let's say that, okay, in the month of January, February, March, they're going to do a TDS from your salary. You can take out this money. You can take care of your daily requirements or monthly requirements. So that will that is how you should work out. So don't wait till last moment for your tax planning or for investments. So I'll just brief you, like, what are the things you're going to get it when it comes to your deductions. So one deduction is, like, we have a standard deduction that is 50,000 rupees for all. Then we have HRA. See, house rent allowance, generally, what happens, okay, we are going to give the rent receipt, or sometimes what happens, you may not be able to give a rent receipt, if you are a tenant in a house. What I suggest is, before you get into the house, you request your landlord, I need a PAN card copy, because the moment your rent crosses 1 lakh rupee, your employer is going to ask you the PAN card of your landlord, because now everything is transparent. The moment you're going to enter the PAN card of the landlord, they are going to enter in your in the income tax website. Landlord's income will be announced there. They're going to understand, okay, this landlord is having an income. From landlord's point of view also, one advantage what we have is, like, apart from the house where you're residing, that is what you call it as self-occupied, one house what you let out where you're going to get a rent is also exempted. It is also exempted. Not necessarily the moment you're going to get, yes, Mr. Srinivas. You have a question here, Mr. Srinivas? You have raised your hand. You can ask your question. I think you can unmute and ask the question. I think you are muted.
Mr. Srinivas, you can unmute yourself and ask your question if in case you have a question, because you raised your hand. Did you do that because you wanted to ask a question, or by mistake you raised hands?
Okay.
Okay.
Let him come back.
Yes. Sir, sorry, I had some technical problem.
No problem. Tell me.
Sir, would like to discuss with you when we have one or more houses, right?
Yeah.
So if one is rented and one is we are staying, so how that tax benefit we can get it, would like to know.
See, in the recently finance in the budget they have announced, one is self-occupied, where you're going to stay. Always that was exempted from your income from house property. You're not going to get any income. Now recently, in the last 2 years, what they've done is, one house apart from where you stay, where you're going to get a rent, that is also exempted. You can show, yes, one house rent is exempted, irrespective of your income from that house property, it is exempted.
Right. Thank you. Thank you so much.
Yes, sir.
Thank you.
Yeah. Okay, I was telling, like, if the income is sorry, if you're going to pay rent more than 1 lakh, I suggest you to collect a PAN card and submit. Otherwise, what happens? Your employer will not consider that particular house rent, whatever you're going to pay. So when it comes to house rent allowance, few calculations they're going to do. Normally, we don't get into that calculation. What is the deduction I'm going to get? How much rent I have to pay and all those things. Just a brief example, like how it is calculated. So one is excess of rent paid over 10% of salary. It's simple. When you say salary here, they're not going to consider your entire salary. They will take only basic and DA. Based on your basic and DA, your entire HRA calculation will be done. So most of the cases, what happens, your basic and DA will be less, your other allowances will be more, but they're not going to consider all those things. Okay, just check out your total ES basic and DA. And out of that, you deduct your 10% of your 10% you're going to deduct from your rent. Let's say that you paid a rent of 1 lakh. Your basic and DA is total for entire year, or basic and DA is around 3 lakhs, just for example. So 10% of your salary is 30,000 rupees. Out of this 1 lakh, whatever the rent you paid, deduct 30,000 rupees. You're going to have 70,000 rupees. That is one criteria. Second one, so Bangalore, it is 40%. If you're staying in Delhi, Mumbai, Kolkata, or Chennai, it is 50% of your salary straight away. In Bangalore, it is 40%. Again, salary is all about your basic and DA. So in our 3 lakh rupees, 40% will be 1.2 lakhs. First one is 70,000. Second one is 1.2 lakhs. Actual rent HRA received. What are the HRA you have received? Suppose you received an HRA of 1 lakh. So out of these three, whichever is lower, that will be considered as an exemption for this HRA. In our case, 70,000 rupees, which is the lower one. That is excess of rent paid over 10% of salary, because you paid 1 lakh rupees rent. Out of that, 10% of your salary is 30,000 rupees. If you deduct 70,000 rupees, second category, it will come to 1.2 lakhs, 40% of your salary. Actual rent HRA received, I just took an example of 1 lakh. So by considering all these things, you're going to get an exemption of 70,000 rupees, 70,000. Even though you paid a rent of 1 lakh, you'll get an exemption or deduction only till 70,000 rupees. That is how your HRA will be calculated. So it's very simple calculation, not complicated. So if you can understand, then you can decide, okay, how much of rent I can show. At the same time, one more thing, what happens, there's no rule that you cannot pay rent to your parents. Okay, there's no rule that you cannot pay rent to your parents. If you're staying and you are earning, if your house belongs to your parents, you can pay rent to your parents. That can be declared as rent paid. As long as your parent shows that it's a rental income, no problem. That also can be considered. Many of us are not aware about this. Okay, we think that, okay, we are staying in our own house. I don't have any rent. I'm not going to pay any rent. That also can be considered. Then the biggest thing what we need to consider is ATC. Here we are going to get an exemption till 1.5 lakh rupees. These are the generally thing. These things will be considered. One is your EPF. By default, they are going to take it. Housing loan principal component. Housing loan principal component. What are the principal amount out of EMI? See, when you go to bank and get an EMI statement or what are the yearly statement, there are two components out of your EMI. One will be your principal amount, other will be your interest. So out of this, your principal amount, you are going to get an exemption under ATC. So that will be, that is what you're going to get an exemption. That can be part of your ATC. Then PPF, again, you can invest till 1.5 lakhs. This entire ATC deduction, you are eligible for 1.5 lakh deduction. Out of this, entire amount can be in PPF. You can invest till 1.5 lakh, or it can be part. Tuition fees of your 2 children. See, when it comes to tuition fees, there is something called children's education allowance, what you get. Not necessary that you should get a children education allowance from your employer to get an exemption under ATC for your tuition fees for the children's what you pay. Not necessary. Even if you're not getting children's education allowance, if you're going to pay, if you're paying a fees for your children's tuition school, tuition fees can be considered under ATC. Suppose if you're going to spend money on your education, if you pay tuition fees, that is not considered under ATC. Only for your children's, when you pay maximum for 2 children's, they're going to consider that will be considered under ATC for your deduction. And when you pay your life insurance for yourself, spouse, and kids, that will be considered for ATC. Or ULIP also same thing. Or if you have any investment in NSE, National Savings Certificate, only in post office, that will be considered under ATC. 5-year term deposit is nothing but your fixed deposit for more than 5 years, 5 years plus, only in nationalized banks and post office. If you're going to keep an FD in cooperative society, that will not be considered under ATC. Then this is for daughters. If you have a daughter, you can invest till 1.5 lakhs. Sukanya Samruddhi Yojana. Here also you can invest till 1.5 lakhs. That will be part of your ATC. Then last one is ELSS. I suggest you to go for ELSS if you're planning to go for any investment, right? So what is this ELSS? Equity linked savings scheme. We have a lot of savings schemes. As of now, it is only in the in case of your equity. Now SEBI is planning to introduce even in case of data. So as of now, we have only equity. So if you're planning to invest in mutual funds and you're planning to invest for long term, I suggest you to go for ELSS through SIP, systematic investment planning. Advantage is you'll not be knowing like, okay, you need not worry about, okay, I have to take out money and invest. Every month automatically it will be deducted from your account. ECS will happen from your account. Since it is happening every month, what are the investment you have done for 12 months? That will be considered for your tax under ATC. And since it is going to be for long term, one thing is like there'll be lock-in period for 3 years. You cannot liquidate these funds or you cannot withdraw these funds for next 3 years. From the investment, you need to wait for 3 years to withdraw the money. You can stop SIP anytime, but you have to wait for maturity for at least for 3 years. Anything above that, you can withdraw. So this advantage with this is, since you're going to wait for 3 years, there are chances that, okay, market might go up, you get a decent return. There are a lot of mutual funds who have given very, very good returns. I can say that 17, 18, 19, 20% returns they have given. So go for those ELSS schemes if you're interested in mutual funds. One is it will take care of your investments as well as it will take care of your tax saving. Then comes to your interest paid on self-occupied house property. If you have taken a loan, what are the interest you pay for that housing loan? Till 2 lakh rupees, you're going to get an exemption. That is in addition to your principal amount, what is considered under ATC. Then interest earned on savings bank account or post office. Okay, this exemption is till 10,000 rupees. If you have a SB account, I told you like interest is chargeable. Interest is taxable. If interest is till 10,000 rupees in SB account, both in case of bank as well as post office, it is exempted till 10,000. Interest on education loan. If you have taken any education loan, no limit in terms of interest. Any amount you are going to get an exemption, but you will get this exemption for maximum 8 years. Donations, you're going to get an exemption. Again, there are different categories in donations. State government, you're going to, when you donate to state government, recognized, unrecognized, and maximum donation exemption, if you're going to pay cash, will be considered is 2,000 rupees. Anything above 2,000 rupees, you cannot pay by cash. It should be through check or online transfer. That proof should be there. And that you can provide a document as a proof. If you provide it, that will be considered for deductions. Then this is one of the most important thing which many of us are not aware. Interest paid on loans taken for purchase of electric vehicles. So EVs are the most upcoming vehicles, right? So if you're going to purchase any electric vehicle by taking a loan, the interest what you pay on these vehicle loans till 1.5 lakh rupees in a year, you'll get an exemption. In addition to all these other deductions, this is an additional deduction which we are going to get. Many of us are not aware about these things. This is the latest addition to our deductions. So these are the major deductions which we can claim. Obviously, like I told you about NPS, you're going to get an exemption. In addition to your ATC, you can get an exemption till 50,000 rupees for your ATC. Yes. Any questions?
Hello. Good
Yes,
evening.
ma'am.
Yeah, I have a question.
Yes, madam.
Sir, is gratuity amount taxable?
Gratuity amount, actually what happens in case of gratuity, whatever you receive gratuity, according to this gratuity act now, once you receive this after completion, anyway, you are eligible for gratuity only after completion of 5 years.
Yes.
So till 20 lakh rupees, it is exempted for your entire life. Suppose you worked in one company for 5 years, you got a gratuity of 10 lakhs.
Okay.
Next time when you get into an employer, second time when you get 15 lakh rupees, you're not going to get entire 15, entire 15 lakh is not exempted.
Okay.
Already you have taken exemption for 10 lakhs, another 10 lakhs is exempted. Balance 5 lakh rupees is taxable. So in your entire life, you can get an exemption till 20 lakh rupees.
Okay. Thank you, sir.
Yeah. Yes, any other questions? Any other questions?
Looks like everyone understood everything, or maybe yes.
I don't know,
Right.
like, is there any problem, or how many of you understood? How much was it? Too much?
I understood it thoroughly, and I'm sure all of them would have understood according to me. That was actually speaking that in terms of your explanation, I was able to understand it completely, especially the salaried section really helped me a lot because, I'm an HR consultant. So we don't do recruitments, we manage candidates and come in companies. Okay, their salaries.
Whatever I said, like you would have done the same thing. Like normally you go in the month of October, November, you ask them to give for investment proof, right? Then in the month of Feb, March, they might get 50% discount in terms of the salary.
Absolutely.
Okay.
So I was able to really connect with it and understand how it goes and all that. All right. So let us see what folks have asked. Okay. I think Samiksha Swati is asked. Okay. Before that, Mr. Venkatesh is asked, can you explain more on donations given?
Donations, we have different types. One is like when you invest, when you donate for your central government funds, they are going to announce, okay, whether that is fully exempted in terms of tax under section 80G. So whenever they're going to collect funds, recently they collected funds for Chennai or some other thing last year, also they collect 2 years back, they collected. So in those cases, it was fully exempted. Whatever the money you want to contribute, that was fully exempted. So they specifically mention what is the percentage of exemption you're going to get. So that you should take care, because there's no fixed percentage which you're going to get an exemption. That you have to take care from that particular donation. When they ask you, when they call you for donations, they specifically mention what is the exemption you're going to get it. That should be taken care from that level.
Right.
Make sure that you're going to pay through cash or online. Don't pay if it is more than 2,000 rupees. Don't pay cash. Even if it is exempt, even it is coming under exemption limit, you will not get an exemption because you're going to pay cash.
Right. Got it. Yes. And the next question is that from Samiksha Swati, is lump sum investments in mutual fund good for small investors?
See, lump sum investment, okay, depends on, see, what happens in especially small investors or retail investor. I'll not call them as a small investor. Everybody is big from their point of view. Don't treat anyone as small or big. See, a person might have 50,000 rupees, other person might have 5 lakh rupees. 50,000 person who is going to invest, it's big for him. See, what happens, timing of market is very difficult, especially when you are not able to concentrate. See, one reason why we go for mutual fund is we don't have time to think about investment. We don't have time to understand what is happening in the market. That is the reason we go for investment. I suggest not to do any lump sum. That's my suggestion. I'm not telling not to do. I suggest not to go for lump sum investment in mutual funds, because in mutual fund, what happens? It is difficult to time the market. See, we don't know what is low, what is peak. See, 60,000 when Sensex was 60,000, everybody thought it's a peak. And the moment you think about investment, it's already lifetime high. What is the use of investing? Same thing would have happened when it was 50,000. When Sensex was 50,000, So people would have felt like, okay, it is there at lifetime high. It is difficult. It is risky to invest now. But market has moved from 50 to 60,000. See, if you're ready to wait for long term, yes, you can invest lump sum money also. Nothing like small or big, doesn't matter. If you're ready to wait for long period, you can invest in mutual fund, no problem. But I suggest to have an SIP instead of lump sum investment, because your investment will get averaged out. Whether market will fall, see, if market falls, it's good for you because you will get more number of units for same amount. If market goes up, your net worth will go up. Your investment corpus will go up. So that is an advantage. If you can wait for longer period, see, you cannot imagine if you can wait for 25 years. A person, I normally suggest all my students, the moment you start earning your first salary, at least you should start an SIP with 2,000 rupees or 3,000 rupees. Nowadays, we know that, okay, they are going to get a package of at least 5 lakh, 6 lakh. See, when they're earning around 40,000, 50,000, 2,000 rupees is nothing. Normally, I suggest them to go for 20% savings and investment, at least 2,000 rupees in a year, in a month. You can't imagine, it will runs into crores after some point of time, maybe around 25, 30 years. I hope like I answered your question. That is Samiksha Swati. Yeah, next question I can see here, explanation. Okay, that's okay.
Okay. So the next person told was,
Bitcoin.
shall I share the screen? Shall I share my screen?
I can see here, chat.
Yeah. Okay, cool.
I can see the chat.
Mr. Venkatesh is asked on your views on Bitcoin.
Bitcoin, actually, it's not legally, it's not allowed in India as of now.
Correct.
If they consider this for an investment, and one risk involved in this here is, we don't know who is managing it. That's a riskiest part. So if you ask me, yes, I think it may be around 31 lakh rupees in terms of rupee for one Bitcoin. Yes, if you can wait for long term, as an investment, you can do that. But it's a high risk investment. It is riskier than your equity, if you ask me.
Right. Cool. So is that okay if I share my screen now?
Yes, I'll stop sharing.
Sure. No.
I think it's
correct.
Yeah, you can share.
I did. Yes, I think folks will be able to see it. Okay. And all right. Samiksha said, thank you. Dr. Veena said, explanation was very good. Thank you, Professor and Team Disciples India. All right. We also have, let me quickly run through the next session. So basically, we have a feedback form. People who attended now can fill in their feedback forms, which will be shared in chat, and as well as for the folks who's watching us in YouTube and wherever. So people can go in there, check out the link that we will be sharing it now in a seconds. You can click the link and fill in your feedback form so that you can get your participation certificate. It's an e-certificate, which will be shared in Zoom and YouTube both. All right. So meanwhile, I will have 3 minutes given to all of you. Maybe 2-3 minutes. We will leave it blank so that folks can fill up the feedback. So that we will ensure that you will get your e-certificates given to you folks. Meanwhile, while in this 3 minutes, we will play a couple of videos on what we've been doing for last 4 years. So I'll just play those videos so that folks who have completed the feedback form can just look into it. Now I think Mr. Shiv Prasad will be sharing the link now. Once he shares the link, you can start filling up. So. So I'm gonna play the videos now. I think a link is shared now. I think you folks can start filling it up. Meanwhile, we will play a couple of videos on what all the sessions we did in 2018, 19, and 20 until people fill up the feedback form. sure now all the folks would have filled the feedback form by now. So we will next move on. Anybody? Yeah, I think Mr. Srinivas raised his hand a couple of times. Mr. Srinivas, would you like to say something? Mr. Srinivas, you raised your hand a couple of times. Would you like to say something? Okay, it looks like Mr. Srinivas is not able to hear us. Okay, meanwhile, we proceed further. Okay, Srinivas raised hand again. Mr. Srinivas, would you like to say something? You'll have to unmute yourself and speak. Mr. Srinivas, you'll have to unmute yourself and speak. Okay, looks like a glitch. So anybody would like to give any feedback for the session here today? Okay, let me start. In fact, I was really happy that I was a part of the session because this was much needed, and it is the right timing actually. We are all in the month of March, and I mean, we are heading to March. So it's really important for me to also personally, not just about my employees, my colleagues, also to ensure that I myself start some investments and things like that. I've been thinking for quite some time about some SIPs and some investments, which I've never done it so far. Today, I think I will take a pledge to go ahead and start saving some money and invest right. So this session was really helpful for me to understand, what I should be doing. Thank you so much, Professor, for having enlightened us with a lot of knowledge on the investments and savings. Thank you very much.
Yeah, it was my pleasure to be part of this program.
Thank you. Mr. Shiv Prasad or anybody else, would you like to say some feedback? Maybe Dr. Sandhya, would you like to say a feedback?
Yeah, good evening. Yeah, it was an excellent session, and even people from non-finance background could understand, because more relevant that too. Now we are in the month of end of February and March. Normally tax calculation will be required, how much it should be done, and at least if this year if we have not implemented, as our speaker has said, from next year we will try to focus on investment from November, December itself, instead of going for investments in the month of March to avoid tax. I mean, for better tax planning. I feel that's a lesson for everyone, which we need to follow. Very useful guideline, and thank you very much, Professor Satyanarayan.
Thank you, madam.
Thank you. And even Dr. Monisha has also told that it is, thank you, sir, worth attending this session. Right, great. It looks like people have learned and they've understood that completely. So meanwhile, what I would do is that, first of all, today's session, we have, session partner today is Institute of Practical Accounting and Taxation, that is Impact Bangalore. They've been the partners for today's session. And all right, so it's time for us to stand up and honor the national anthem. As a practice, we follow this. We play the national anthem just before ending the session. And may I request all of you to switch off the camera and stand while we play the national anthem.
Jana Gana Mana Adhinayak Jaya He Bharat Bhagya Vidhata Punjab Sindh Gujarat Maratha Dravida Utkala Vanga Indra Himachala Yamuna Ganga Uchala Jaladhi Taranga Tava Shubha Name Jage Tava Shubha Ashish Mange Gahe Tava Jaya Gatha Jana Gana Mangala Dayak Jaya He Bharat Bhagya Vidhata Jaya He, Jaya He, Jaya He, Jaya 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 He.
Thank you all. So if in case any of the folks who wants to you can write out to us at dillearningforum@gmail.com or disciplesindia.in. You can also follow us on like, share, and comment us on Facebook, that is Disciples India Group. All the photos of the sessions that is taken will be uploaded in our Facebook page, so people can go there and download the images that they want. If in case you wanted to become a Disciples India Learning member, then you can always reach out to Dr. Sandhya or myself or Mr. Parthos, Mr. Satish, Mr. Shiv Prasad, and Akhilesh. I leave this screen opened so that folks, whoever wanted to make a note of the numbers and reach out to us, you can do that very well. And anything else anybody wants to share, feel free to reach out to us. I leave the screen for next maybe 60 seconds so that people, whoever want to take a screenshot, can take a screenshot, and we are done for the day. I would wanted to thank every individual who attended here today. Thank you so much. The session was good, especially the facilitator, the trainer was the guest was able to help us understand that in a very nice, simple language. And I'm sure all the folks who attended would get the benefit of it and start investing. Hoping that everyone will start investing, and let's make the country wealthier. Thank you. Good day, folks. I leave the screen for another 60, 70 seconds. Thank you, Professor, for having enlightened us with the knowledge.
Yeah, again, it's my pleasure. Can I leave?
Yeah, yes.
Thank you. Thanks everyone for your time.
Good day. Yeah, good day, everyone.